So let us start with the line chart. So the line chart would simply print out price movement. It's very simple to understand how it works. So it's simply print out how price has been moving. And when you go to the bar chart, you would find these bars. We have the red bars and the green bars. And these bars are different in different time frames. So this is the monthly time frame. On the monthly time frame, each bar would represent price movement for 1 month. That means uh, on this particular month, we had price moving from this point, going down and closing at this point. So we had this up move before it went down. So at this particular month where we have this green bar, it simply means price opened at this point. So this was the beginning of the month. And within this month, price did go down. It also went up and then it came down and price closed the month at this point. And this is how the new month opened. We had a movement of price going up, price going down, and eventually price did close at this point. And if the opening price is greater than the closing price, that means in this month we had a bear market. But if the closing price is greater than the opening price, it simply means this month the market was bullish. So basically, what the bar chart would give you is the open price for the respective month, the closing price for the respective month, the highest price reached for the respective month, and the lowest price reached for the respective month. And these prices are important during our analysis, and you're going to see them. Although we rarely use the bar chart, mostly we use the candlestick chart. So the candlesticks carry more information than any of the three charts. So what would the candlestick represent? So a candle would be like this. This will be a candle. We have this is called a body, and these are called shadows or wicks. So we have the body, and we have these wicks. So depending on where the market was heading, the opening price and the closing price of the respective candlestick are usually this upper body and the lower body. So if the market was going up, for example, this is the same pound chef monthly time frame. So for example, on this particular month, we had a green candle. A green candle simply represents that the market was going up. And the red candlestick represents the market was going down. So for a green candle, this would be the opening price, and this will be the closing price. So that means price opened the month at this level. We had a bearish move, and then we had bullish move, and then eventually price closed at this price level. So that's why we have this body and the wicks. And on the next month, price opened. We had a move going up. We had a move going down. Eventually, at the end of the month, price closed at this point. That is why we're having a bearish candlestick. So a downtrend would have many bearish candlesticks than the bullish candlesticks. But an uptrend would have more bullish candlesticks compared to bearish candlesticks. And it works the same as the bar chart. Depend on the month that you are in. Depending on the time frame that you are in, each candlestick would represent certain time frame. So for example, here we are in the monthly time frame. Each candlestick here represent price movement for the whole month. So if you go to lower time frame, you would even notice that price movement is faster on lower time frame. For example, let us go down. This is the weekly time frame. So each candle here represents 1 week. This is the daily time frame. So each candle here represents 1 day price movement. This is the hour fall. So each candlestick represents 4 hours of price movement. And you can see now that you can clearly notice price is moving because this is the live market now. And this is the hour and time frame. So each candlestick here represents 1 hour of price movement. 30 minutes, you can see price moving. 15 minutes, so each candlestick will represent 15 minutes. 5 minutes, you can see price moving. And we have the 1 minute chart. So let us observe the 1 minute chart. You will find that after each minute, a new candle would open and the previous candle would close. So let us observe for about 3 minutes. So price is on a bullish trend. So we are now in another candlestick period. So you can see the new candle started with a bearish move. So we wait for the candlestick period to complete in order for you to identify if the candlestick is actually a bull or a bear. Okay, so you need to wait until the 1 minute is over in order to identify the candle if it's bearish or bullish. Because sometimes the candlestick would give its true identity at the end of the candlestick period. So for here, you can see how that candle has now turned to bulls. So it has now turned to green. Okay, you can see the candlestick is actually bullish. So you can see how these candlesticks print themselves. So if you go to the line chart, you simply see price moving and leaving a line there. So if you go to the bar chart, it will be like how the candlesticks work. So you can see how price is moving. So the opening price, the closing price is still moving. That's how the bar chart works. So price has opened a new bar chart. So if you go to the next time frame, so this is the 5 minutes bar. Let's go to the candlestick. So we'll be mostly using the candlestick chart. So this is the 5 minutes candlestick chart. And each candle represents 5 minutes of price movement. So if we draw a box on this candle here, so let us draw a box on this candle. And let us now go to lower time frame and look on how many candles are within the 5 minutes candle. So let's go to the 1 minute chart. So when you go to the 1 minute chart, you would observe inside here there is 1, 2, 3, 4, 5, and about 6 candles there. So it has to be 5 candles. So I think I've drawn, so I've actually drawn on the week of this next candle. So there are 5 candlesticks, 5 1 minute candlestick within the 5 minutes candlesticks. So it works like fractals. So as you go to lower time frames, simply you see price price movement in lower time frame per one candlesticks would give you a few pips compared to the higher time frame. So a monthly candle, for example, would have many 1 hour candles within it. So this here is the monthly candle. So when you go to the weekly, you can see there are 3 weeks within it. And we're actually on the 3rd week of June. So if you go to the daily, usually this is the beginning of the month candle. So these are the number of days this month has moved. So these are all represented by one monthly candle. So it works that way, yeah? So if you go to the hour 4 time frame, you can simply see here. The period separators. So these are called the period separators. We have this line and this line represent a certain period here. And on the hour 4 time frame, this is 1 week. So 1 week, 2 weeks, 3 weeks. If you go to the daily time frame, this is usually 1 month. So 1 month, 1 month. If you go to the weekly, you'll find it is 1 year, and the monthly it is 1 year. So this is movement of price for the whole year. So if you go to the hour 4 time frame, hour 1 time frame, this is the hour 1 time frame. This would represent 1 day price movement. So this period separator would represent 1 day. So even in the lower time frame, it will still remain as 1 day from 1 hour going lower. Okay, so in our learnings and in doing our analysis, would rely more on the candlestick chart because the candlesticks have more information than any other chart. And with these candlesticks, we will learn about patterns that may be formed. The candlestick patterns would learn of chart patterns, would learn of market behavior that would trigger traders to take a buy trade, a sell trade, etc., etc. And that is the basis of technical analysis. So you need to embrace and learn on how to use these trading platforms as you learn of any other app that you have maybe on your PC or on your phone. Uh, because these are platforms that you would use to trade the market. So, like if you go to work, this now is the system, eh? So you need to be aware of the toolbars, etc., the time frames, the candlesticks, etc., etc. So it's very important for you to be aware of how to use these tools.